How will mortgage forbearance ending actually affect the housing market? Is it going to crush house prices? Is it going to result in a ton of foreclosures coming to the market, bringing down property values? That's what we're going to talk about in today's video. My name is Jeb Smith. I'm a real estate broker here in Southern California. I've been talking about mortgage forbearance since the beginning of the pandemic. And today I want to take a little bit of time and talk about it in more detail because we're continually getting updated numbers on people exiting forbearance, what's happening. I've also had a couple of people reach out to me directly to talk to me about different options they were given by their lender when exiting forbearance. And, I think this will shed a little bit of light on those that think that forbearance is going to result in all of these foreclosures. We're also going to talk about, a little example, if you will, of missing payments, but also what happened with regards to appreciation over the last year to give you a better idea of what you're likely to expect when forbearance ends. But let's take a minute and talk about something that actually happened today. The Federal Housing Finance Agency, the FHFA, actually extended the forbearance period on multifamily properties. So multifamily forbearance was set to end at the end of June. You can now request an additional 3 months, taking that out until September. And for those of you who haven't really been following forbearance too closely, back in February, they came out and also allowed an additional 3 months on single family homes, allowing you to take up to 18 months in some cases of forbearance. So depending on when you took forbearance, you might actually not come out of it until 2023. So the idea that you're going to see this massive wave of properties at one time is very unlikely, just because of when people entered them. They're all going to exit at different times. And as of right now, we don't know. Could it be extended again? Quite possibly, yes. But that's to be determined. But let's talk about what's happening with forbearance numbers. Right now, we're at the lowest levels that we've seen since pre-pandemic, right? We're trending in the right direction. The number of people exiting forbearance is headed the right way. And the majority of people that are exiting forbearance are performing on their loans. So, they're coming out of forbearance, they're able to make their payments, things are moving forward. So these people aren't getting behind on their payments. Now, clearly there are people exiting forbearance, as we've shown in different Black Knight reports, that have resulted in, foreclosure, or they will foreclose at some point because, they're not making their payments. But it's a very small percentage. I mean, we're talking, 1-2% here of the number of people in those cases. But let's actually talk about what people are getting when they're exiting forbearance, because I think that's important and will really help you understand how much these servicers are willing to help homeowners, borrowers stay in their property, because I think that's important. A lot of people, keep saying, hey, the lenders just want to screw you. Everybody wants to screw you. They just want to take your property. They don't want your property. The lenders do not want your property. It costs them more money to foreclose on that property than to extend the term of that loan and give you an opportunity to stay in it. They don't want it. And quite frankly, there's so much pressure by the CFPB on these servicers to work with homeowners that if they didn't, it would result in even more issues on their side. And that's why they're offering crazy terms. I had someone reach out to me recently, had an FHA loan, and they had missed payments for over a year on that loan. And the lender actually took those missed payments and they took part of the principal from their first mortgage and actually made that a silent second mortgage, part of that partial claim, not having to be repaid, no payments on it, any of that stuff, until they either refinance or sold the property. And so they lowered the balance on that first mortgage. They also lowered the interest rate from 4.25% to 3%. And it actually made their mortgage payment lower now than it was before the pandemic. So those people are in a better position to keep that property than they were prior to the pandemic. And that was an FHA loan. Another example is where, clients had missed payments for a year, didn't make a payment for the entire year, didn't take forbearance in this case, but the servicer, the lender, still reached out to them to offer them basically a modification of the loan to try to keep them in the property. And one thing they did was they took the balance of that mortgage a lot like the FHA, made it a second, added the missed payments onto that second mortgage. They also extended the term of that loan back to 30 years because it wasn't a 30-year term. So they extended it back to 30 years and lowered the interest rate, which made the payment considerably lower than it was prior to the pandemic, giving these people an opportunity to stay in there. So, again, these are servicers wanting to work with homeowners to keep them in the property. That's one reason why you're not going to see this massive wave of properties come to the market, is because a lot of these people are now in a better position than they were prior to the pandemic with regards to their mortgage payment. Now, you might say, well, these people, they don't have jobs and they're not in a position to these lenders are doing things to keep people in there. They're willing to work with you. If you're having that conversation, chances are they're going to work with you to some extent to keep you in the property. Now, there will be properties that have to be sold as a result of this. No doubt. There will be people that can't make that payment for whatever reason because they have lost jobs, or there's just things, life changes that have happened where they're going to need to sell those properties. So there will be properties coming to the market, but understand, these are going to trickle out. They're not all going to happen at one date. It's going to happen over the course of the next year, year and a half. You're going to see properties come to the market, and they're likely going to be priced somewhere near market value, right? And right now, because of low supply, high buyer demand, demand's not going anywhere. When these properties do come to the market, they're going to sell pretty close to what they're worth. Imagine a property that came to the market that was priced well below what other homes in the market were selling for. It would get a lot of attention, don't you think? Especially when homes are receiving multiple offers. People would look at that and say, well, there's an opportunity there. I can buy that property for much less. And it would end up selling because of multiple offers and it getting bid up probably higher than where it was, a fair market value in that case. A lot of what we've seen. And if not, you have different, hedge funds, pension funds, investors out there looking for property that are deals. So these are properties that would get picked up. That's why you're not likely to get a deal from people exiting forbearance. And lastly, I've talked about this example before, but let's talk about a $500,000 home, right? Over the last year, on average, 10% appreciation, which I think is actually low for most markets. Some markets saw over 20%, but let's say that $500,000 home last year appreciated 10%. Well, that $500,000 home is now a $550,000 home. Well, let's just assume that that property had a mortgage payment with taxes, insurance, everything. Let's say $3,000 a month. And so $3,000 a month times 12 months, that's $36,000. But their home appreciated 50. So even though they missed payments of $36,000, they gained $50,000 in equity. So even if it were a silent second added to the back of that loan, they still made money last year with regards to that appreciation. And you can argue the numbers and say, well, maybe the mortgage payment was $4,000 a month. Okay, that's $48,000. The home appreciated 50, so it's more or less a break even. So what I'm trying to get at here is if you're somebody sitting on the sidelines and you're waiting for these opportunities, you're waiting because you think that these foreclosures are going to result into something larger, I would tell you the only thing I think is going to happen is that they're going to potentially give more supply, more options to home buyers, which may cause less of a frenzy out there when purchasing a home. Less appreciation, is what's going to happen, but you're not going to see some huge decline in property value. So if you're in a position to purchase now, you're likely better purchasing now than you are 12 months from now because, yes, there might be more opportunities then, but chances are values are going to be higher a year from now when these properties come to the market, just because of buyer demand and low supply, right? There's no other reason that supply is going to change. Now you could say, well, what happens when the evictions end and all of that good stuff? And today we actually got a little bit of information on the evictions. It's going to stay as of June 30th at the moment, unless it's extended again from the CDC or what have you, because the U.S. Appeals Court kept that date in place, even though it had been overturned by a smaller court. But, when evictions end, you're going to see, again, property come to the market, but it's not going to be this massive wave of property. Investors, if they were to sell these properties, they would need to take that money and move it into something else, where are they going to move it? There's no other property to buy. The chances are they don't want to pay taxes on it. There's just all of these issues that are compounding on one another that I think are likely going to keep supply low. And while interest rates stay low, buyer demand is likely going to stay high. So I don't see a lot changing in the housing market, and therefore I don't see forbearance really playing a part in affecting home values, at least for the next 12 to 18 months. But again, that's my opinion, right? I'd love to know your thoughts. I know you guys aren't shy with putting those in the comments, so do me a favor, let me know your thoughts below. Let me know if there's something you want me to cover. If you have a question, you can put that in the comments below as well. But for now, I appreciate you taking the time to watch. I appreciate all the support. Hope to see you again soon. Have a great day. Bye-bye.